Hey guys, it's me again. This is Brad. It is still the 3rd of June, and I thought I would wait until the end of the day to kind of play this out and see how it worked out. Remember, this is my 2 minute chart. We originally started off going over this little block of data right here, carrying through this 16.5 point move to the downside. Then I'm getting rid of stuff that I keep finding out here that we don't need. Then we played out through this move here, taking a little 4.5 point loss. Then we highlighted the air. Let me come in here and show you. We highlighted the air that I called air in this area, breaking down potentially in this area or breaking up in this area. This is where we saw the big breakdown, breaking below the ultimate lows right here, moving down into this deeper territory, running into initial support right where I said it was. Take a look at this 10-minute or 15-minute chart. You can see the support levels that I highlighted. This is now our ultimate low down here. But you can see how I highlighted this support level. We came right to that level. We came back down here to this 5.0 level, looks like right here. Or that's actually a 618. And we came back down here to this lower range of the 5.0. There's a 382 to 5.0 level. Came right below that level and rejected. Okay, rejected. Here's our deep low, but it was rejected right at this area. Now we've started to climb higher. So I've updated this to show you exactly what I think is going to happen. So I'll move these things out of the way, make sure that you guys can see what's taking place. I'll get rid of this. I'll get rid of this, which was our support zone area. I'll leave the rest. And so now we have an anchor bar here. We're moving up. We have an anchor bar here. Not yet have an anchor bar here. We're basically looking, again, look at these support and resistance areas here. Okay. So understand that these are, make sure this is pointing to the right location. Yep. So here's the range from here to here. I call this the intermediate range. So basically, we're looking at one Fibonacci range from here to here. That is this outer range right here. That gives us a 382 to 50 support level right here in this area. Okay. Now we look at the intermediate range from this peak here down to here. We set up the 382 to 50 support area right here. Now, this gives us a pretty good indication right here that we blew through this range and confirmed. We're now in an uptrend. Very strong, moderately strong uptrend because we had confirmation of this breakout range above this 382 to 50 support area. Now we've seen a little bit of rotation. We've seen a secondary anchor bar that confirms it. This is after rejecting down here at this level, which is a very good sign. Price rejection, remember, price is always either going to attempt to move higher or lower. So if it cannot move lower down here, which direction is it going to go? It's always going to go one way or the other, higher or lower. So if it can't go lower, it's going to go higher. So now the biggest point that we have here is that we have this major peaking level right across here. That's a standout high. Okay, we have a little standout high right now setting up here. We could probably get a bunch of them going down to a 2 minute chart, but ultimately, this blue standout high right here is what we need to see for the market to move higher. So I'll get rid of this, and I will get rid of this, and this, and this. And now, in order to see this market move higher, we've got to clear above this resistance channel, which is where we're at right now, and break above this blue line in order for us to move higher. That would again move us back into this air area. Let me spread this over here. And like this is empty air. Okay, this is areas where price hasn't touched in many hours. If we get above this level, we could see a very strong squeeze to the upside. We've already filled this empty air area. So remember, that's a very solid downturn, rolling back up to the upside. Where would we be looking for our support levels? Very simply, guys, you want to keep them right below the last two or three uh, anchor bars, like I'd been teaching you earlier. So the anchor bars provide very solid support. You can see right here, we're looking at a pretty solid support right in this area. And I'm going to go into the 2 minute here in a bit. We're going to take a look at what's happening, but you can see we're getting confirmation to the upside. We're breaking through the resistance channels as we move higher. We found that support level here was very valid. It did get lower, and you've got to think of support and resistance as like soft, fuzzy lines. They're not really hard like concrete. Price can go through it and come back up above it. That's called rejection. Highs and lows are important when price is trying to make a new trend. But as far as support goes, it's kind of a fuzzy line. I mean, the easiest way to try to describe it would be to, draw an ellipse kind of like this and say, well, here's support. Well, how do I define it? Well, it's kind of in this area, and it can get through there around this area and try to move out of it. The longer price stays contracted down in this lower area, you would expect price to continue to move downward. If it's an immediate rejection like this, where it just gets rejected almost instantly, then you got to remember we're actually looking at price failing to come back down and establish this new low. You can see it here. Breakdown, new low, breakdown, new low, breakdown, new low, breakdown, new low, breakdown, new low. Rejection, higher low, higher high, anchor bar. Hey, guess what? This is complete price rejection down here in this zone. It is not going to tolerate it. That's what this is telling you. And the only way that it's going to get down below this level is if there's enough selling pressure to drive price through this horde of support, which is actually buyers trying to eliminate it. And if it does get through there and breaks down, then yeah, we would be looking at a pretty solid downward turn from this area down here, maybe even deeper. But right now we're going higher. So let's go down to the 2 minute. I just wanted to highlight this because it's been a beautiful day for an example. So I'll get rid of my air channel here, my support. You can see how we've come all the way through this channel. This last move here from our lower support area right here, where we got into this trend, was a solid 26, almost 27 points to the downside. Lots of room for profit in there. Remember, I would argue that the sweet spot, get in here, get in here. I would argue that the sweet spot is right in here, right in this initial move. So that's really what you want. When you get the breakdown, just like we did here, this nice little sweet spot, that initial move, that's where you want to try to target. So here we get the break away, the break up. We get above this resistance channel. There's your little sweet spot right there. That's where your money is. Now we're getting a bit choppy and we're trying to get above these levels. You can see we get a nice solid topping pattern here, which is important to realize. This could be a solid double top, giving us a nice solid resistance. And let me spread this out. We're getting anchor bars up, anchor bars down. So we would look here. Here's our newest anchor bar. We have no anchor bar here. We have an anchor bar here. Kind of hard to see. Let me see if I can get the anchor bar code up on the top. Bring the front. Spread this out. So here we have a little more definition of the anchor bars. So if I were to look at this and try to consider the avoid loser range, considering we have this chop through here, which is kind of setting up into a flagging formation. So we'll see how this sets up, maybe across here and maybe across here. Pretty broad flag moving out. But what again I would do is I would look at these areas. This is a warning of a reversal. These are anchor bar areas. You can see we've got multiple support in this area. So I would push something here and say this is probably a pretty good range to set up on the low side as our avoid loser range. And given this area here and this double topping pattern right up here, which is almost perfect, I would likely say that we are going to have a avoid loser range peak somewhere up here. Now, the purpose of the avoid loser range, and in reality, you can see that this is tightening. So, you could almost come out here and run a tightening angle right up the side of this flag and say, we have this loser range down here we want to be cautious of, but we also have this loser range outside here that we could mirror right up the outside flag here, lower portion of this flag. So when you get right down to it, we have an A, B, C, D, E. Again, I'm always looking for the initial wave. So this is our initial pullback in an uptrend. Why would I expect this to be moving higher? Is very simple, because we have this initial move, very aggressive, moving up into this area. Here's our pole coming up here to an A, B, C, D, A, B, C, D, nope, A, B, C, D, E. So I'll draw that. Pole up to A, B, C, D, E, and E looks like this. And so now we've gotten through the impulse wave here. We've got our lower level here, which is our avoid loser range zone. This is where we're actively engaging in a warning that we could move lower. This one, same thing, actively could move lower. And this one actively could move higher. So at this point, we're sitting over here on our 2-minute chart. We're in this sideways range. If we have any open positions at this area, this would be our effective stop in this area. Now, why is this area important? And I'm going to explain it to you. It is a Fibonacci level. So let's come down here and take a look. We'll go down to this low, come up to this high, and it's the same process, guys. I'm doing the same thing over and over again. 382 to 50 area right here. This is our critical support to the upside. And gee, what do you know? That dumb yellow line is right there, right where I drew it to be indicative of support. So again, this is a support level based on this upward move. We would be looking for very strong upward trending at this area as we flag out right over here. So we're kind of watching for this flag right here. That's the apex move that I think is going to cause a breakout to the upside. We shall see. I've got a little bit of time left, so let's go over the data again. You're using anchor bars to determine where we're at in the trend. You see here we had, let me move this over a bit. You see through this move, we had very clear anchor bar activity. In a downtrend, you typically see a lot of down anchor bars. In an uptrend, you see a lot of bullish anchor bars. And look, anchor bar, very simple. If we're going to confirm, it's going to get above this level. And if we're going to fail, it's going to get below this level. Very simple. You can draw a box around it, whatever you want to do, but it's pretty simple. Just pick a little area right above it and a little area down below it, and realize that you're going to get this setup every time you get an anchor bar. So this new anchor bar closes above it. We're bullish. Now we come up here. In order to confirm, it's got to get above that level. You could leave this one here as a trailing stop or move it up if you want. But understand that, this depends on how you want to do it. I'll leave it down here. It closes above. Okay, so now we got to get above this level. We start to get a little rotation right here. What do I do? Well, I'm not too concerned about it. Mathematically, I can move my level up here, extend it out a little bit, and say, okay, we're in an uptrend. We got in on confirmation here, and this is where my protective level is. Essentially, I got in on confirmation, let's say end of this bar. So my entry will be over here. My stop is 2.5 points, and I'm preparing to just let it rip. So here we go. Get another confirmation bar. Lovely. Move our level up. Leave this level here. We get another confirmation anchor bar here. Move it up. Another confirmation anchor bar here. Move it up. Another confirmation anchor bar here. Move it up. Now at this point, we can move our stop up probably into this area or a little higher. And understand, guys, you just witnessed the impulse move. And this is a very solid move from this point contraction onward. This is your sweet spot right there. Remember, you actually got in right over here. Actually, at the end of this bar, you got in right over here, confirmation. So you really had the sweet spot of about 16.5 points, maybe 15 points or so to the upside. Then we move into this consolidation. And remember, price is ultimately going to tell you what to do. So as we move, through here, you can see these confirmation areas off of the anchor bars play a very important role as we move forward in time. You can see that eventually we get this breakout here on an anchor bar, which then moves everything up. We can still keep this level down here, which was threatened but not really breached. Then we get another anchor bar here, not higher than, well, actually, maybe, yeah, a little higher. So we'll come over here and move our anchor bar up a little bit. Then another anchor bar here, move our anchor bar up. We're starting to get some movement higher here off of this low here. So you can see lower low, moves up here to a higher low, moving higher. So in theory, we could come up here and move this just below this anchor bar right here and say that this is now our range. As we continue to move across this area, you can see I'll just drag this over roughly. You can see we're now trapped in this sideways channel. And we've been, again, long. Let me show you. We've been long from right over here. Technically, I mean, we could have rolled in and out of a couple positions, but we got long right on this bar, and we are long from this point all the way up theoretically, because we've never seen anything come down and threaten the position based on Fibonacci price theory. So make it bright green and solid. So we're nice and long here, guys, and it looks like we're about ready to get our breakout. Let's take a look here and see what happens. Flagging into the apex beautifully. Well, we got to get above this level, which is above our last major anchor bar right here. We need to protect this level, which is from this anchor bar right here. So from that point on, we haven't seen any major activity. We need to break out above this level, getting above this level to go ahead and try to get any type of upward movement. And remember, we would be looking for support or resistance in this case to form in this area right here. So we're going to take a look at this. And remember, we're looking at previous levels of resistance. So here we have our 382 to 50. Here we have our previous levels. And you remember how we had this previous ultimate low here, then came down to another ultimate low here. Well, you can map between this high, between the ultimate low and new ultimate low, a new level, which then gives you the 382 to 50 area, which is right here. And interestingly enough, we have a fairly solid resistance area right here where I drew it. So again, I see these things on the chart, but you will learn to see them inherently if you follow what I'm doing and practice it on your own. So again, we're at 19 minutes into this. let's go ahead and take a look at it. We never did. Well, we did get down to this area, but I'll get rid of that line. Let's take a look at what's going on here and see if the price actually wants to break out here or not. And I just thought it was very, very interesting how, we get this move. We called the support level down here. We call the support level here. I have a lower support level down here, which we never got to. But this was just a beautiful bottom off of rejection. Very clean, very solid sweet spots, 16 and a half points, 15 plus points, maybe another 4 or 5 points here if you're quick. Beautiful 14, 15 point move here where you could have just pulled easy profits off. Now this gets a little bit more difficult, but we're about ready to move another. What do we got here? So if my numbers are correct, we're going to move another 11 to maybe 15 points to the upside. And let's just maybe see what happens. If it happens in this timeline, I can't force the market to do anything, but I know where I'm at. I know what I want to trade. I want to try to get long. It looks long. I can get long any level above here with a very strong breakout, or I can get short with a level breaking below this. My immediate target would be right down here in this area, and my secondary target would be right down here in this area, which is where the 382 to 50 support actually happens to be. So let's see what happens. Grab a little cup of coffee. I'm interested to hear what you guys say about this because this is what I've been trying to teach you with Fibonacci price theory for, months. And ultimately, this is what I see happening on the chart every day. It's now some days are tougher. Some days, like when we get into those flat sideways channeling ranges, normally I avoid those guys. I don't even want to try to, pick apart a 4.5 or 5.5 point range. Now, if it's 11 point, 12 point range, maybe I'll get a little excited about pulling the trigger one or two times. But generally, the market moves from, it's basically this it moves from trending to flagging to trending to flagging to trending to flagging. So, I mean, it's only those two modes. Okay. And if you understand what I'm trying to tell you, you realize that it's pretty simple to go from trending to flagging. Now we're getting ready for a trending mode. Once we hit this apex, and that's going to be in the next couple of minutes, we're going to move into a trending mode and watch. We'll get a nice, probably 15, 20 point move. We only got a half hour to go in the day. We could get a very solid squeeze setting up here. So let's come up here and just say squeeze. Is it going to happen? Are we getting a whole lot of shorts in here that are telling us that the market's going to squeeze to the upside excessively? Well, we'll find out, won't we? I'll let it go for a couple more minutes and see what happens. And then ultimately, I'd love your feedback. Let me know what you think. This whole purpose of all these, the mechanics of trading videos started because a friend of mine asked, how do I pick apart the market? How do I find the entry area? Well, obviously, buying near a low, like in this area, if you know we're going up, or this area, is a great entry opportunity, but you can't always pick bottoms. In fact, I don't recommend anybody ever try it. That's a good way to lose a whole bunch of money. What you're better off doing is just waiting for that confirmation, moving through the different trending flagging phases. And once you get into that trending phase, that move here is the sweet spot. So you get into these breakaway phases, here's a little bit of a breakaway, little bit of a sweet spot. Here we go. We're getting into the sweet spot right here. This will be the next sweet spot right here, if it happens. So again, that's what you're looking for, is those little sweet spots. In and out, grab your 8, 10, 12 points, call it good, and then wait for the next setup. Make sense? So where's my flag? I don't need that. I don't need that. I don't need that. There's my flag. Get rid of that. Get rid of that. Get rid of that. Uh-oh. Whoops. Look what's happening. Look what's happening. 24 minutes into this, we get a little pop to the upside. We don't get any volume yet. That's what I'm looking for, is fairly strong volume. We're definitely getting a clear little pop here. Let's see if it confirms. And if it does, you should see a pretty good move right up into this 25.92, 25.93 area pretty quickly, maybe even further. So here we go. Flagging out. Looks like a pop to me. Going to get an anchor bar here if it stays in this area. We got only a little bit of time to go here. Watch this pop, guys. If it goes like I think it's going to go, it'll pop. It'll be very quick to the upside. Just wait for the end of the bar. Wait for the end of the bar. Come on. Looks good. There it goes. A popping away. See where we end up here. Volume. Look at that volume. What did I tell you? Nice solid volume. Why? Because a bunch of shorts got trapped and they want out. There's our confirmation bar. There's our breakaway bar. Boom. We come back in here. We are now long, confirmed long with this breakaway. We would have our stop level somewhere down in this area, just below the bar. And look, we'll see what happens here. It's rejecting. This could happen near an apex. We'll see what happens. Possibly getting stopped out. Rejected, rejected. Okay, well, let's see what happens. 27 minutes into this video. I'll stop it at 30 minutes because I don't want to run forever. But can you see this? Can you see this setup? Can you understand what I'm trying to teach you here? And again, this is a fairly low risk trade. It's moving higher. It's confirmed to the upside. I mean, this is a pretty low risk trade, guys. And all we're doing right now is we're waiting to see if price confirms to the upside or whether it has a total rejection. Looks like it's getting close to a massive rejection here, which would then put me. So let's play the game. What happens if we get total rejection and our stop level down in this area gets taken out? What happens? What would we do? Well, pretty simple, guys. You take the avoid loser range, you move it up. You take the avoid loser range and you move it up to about where your stop was. And you basically say at this point, we start the whole avoid loser range area all over again. Okay, we know where our support levels are. We know where our resistance levels are. Okay, we technically did not get stopped out. So I would assume, like I said, and I'll draw this again, we want our stop below the anchor bar, but we want it down here in this below this flag formation. So in reality, we would have had our stop somewhere in this area as it moves up. Okay, so again, we're still long. We're still pushing this sucker higher. We now, because of this immediate rejection back below this breakaway area, we need to see this resume back to the upside with fairly strong volume, and we need to see it avoid our stop level. So there we go. And if that happens, we may move into a squeeze pattern here at the end of the day. Is that making sense to everybody? Do you understand how the mechanics of price give us pretty much everything we need for trading? And we'll see how it plays out. I mean, granted, we only have like 26 minutes to go throughout the end of the day, but I would assume, based on this breakaway and this current bar with this stronger volume, and the fact that we're nearing this apex, that we're going to close out the day above 25.92 today, maybe even up into this 25.98 level or higher on a fairly strong squeeze. Okay, guys, hope this helps. Really do. I'll try to do more if you want. Talk to you later.